Hey everyone, Dave Markowitz here, part of the Markowitz Group, and it is June 30th of 2022. And today I want to get into the housing market, the update, what's going on in real estate. People are asking me, have we seen a shift? Is the shift coming? And the answer is yes. So let's get into this. I'll give you all the hard data, the details, granular form, just really dive in. So let's get into it and see really what's going on in the market. All right. All right, guys. So what's happening in the housing market today of June 30th of 2022? There's been a lot of questions. We're starting to see a lot of pullback in terms of buyers because the interest rates are moving up. And it's all due to the inflation factor at this point, guys. It's just, the inflation is the Fed's trying to get a hold of it and how they're reacting to all these things and what they're trying to do to kind of, bring the recession. Not going to full force recession, but we are going into a full force recession. I think we're ready here. Not to scare anybody, but that's what's going on, and it's all due to inflation. So let's kind of like move into this next slide and start giving you real data of what's going on here. So let's talk about the offers received right now. So on listings, and we are seeing less offers. It was, at least in Tennessee here, we were seeing about maybe 10 to 20 offers on every single property. And it was just, crazy bidding. We are starting to see the slowdown. So offers received are going down. Next would be offers over asking. So, bidding wars where we're going crazy. We are still seeing over asking. Don't get me wrong. It's still over asking. It's just not as aggressive. And it's all due because we're getting less buyers right now in terms of coming in because the interest rates are moving up. So the overall offers over asking are coming down. Sales are moving down a little bit as well. And then inventory is starting to move up. So what's happening here is we are getting to a more normalized market. And we'll get into that in the next few slides. So offers received, 5.5 offers, as I'm showing you here on a listing. And now we're about 4.2 offers per listing. So it's still pretty good. I mean, the offers are coming in. It's not like there's no business. It's still a seller's market. Don't get me wrong. It's just starting to now balance out, even out the way it should be, a more normalized market. Offers over asking was at 61%. And now we're at about 55% of offers that are over the asking price. Okay. Mark Fleming, Chief Economist, First American. So there's been a pickup in the inventory that we've seen recently, but it's not from a big increase in new listings, but rather a slowdown in the pace of sales. And remember that month's supply measures the inventory of sale relative to the pace of sales. Same inventory, fewer sales mean more months supply. Okay. Let's look at the new monthly listing counts, and we're looking at it in thousands. And I want to kind of show you. So you're seeing now 2021 and 2022. So you're seeing the flip here. If you go back to January and February, it's reversed. So as we're moving through January, February, and March, here's where really the interest rate hike started kicking in, and it started kicking in very rapidly. And since that happened, you can start seeing that we are now getting more listings onto the market. So we're starting to see more inventory coming into the market as well. Let's go to existing home sales here. And this is really important key. So you'll notice in 2020 and 2021, we were kind of off the charts in terms of, the rate of existing home sales. This was an anomaly, guys. Okay. We were in, crazy times. Nobody knew what was going on. So now May 2022, you see our numbers are now at 5.4. And this really goes in line with pre-pandemic, as you see 2017, 2018, 2019. So we're really kind of in pre-pandemic numbers. By the way, guys, these were all healthy numbers for real estate. So this is all going back to a more normalized market that we're heading back into, which is really a better market for everyone involved. Okay. Lawrence Yun, he's our chief economist for the National Association of Realtors. He came out and said home sales have essentially returned to the levels seen in 2019. prior to the pandemic, after 2 years of gangbuster performance. It's exactly what I was just showing you on the previous slide. Now, active inventory listings, I want to get into this. You can see how the homes on the market were up in 2017, 2018, the gray, the blue, and the lighter blue are up here. Okay. 2020, as we started getting into the pandemic, you saw the drop because this is where all the craziness happened. We are sitting down here right now in 2022, this blue line. And you can see now that we're starting to see right here, inventory starting to shift up now. Okay. So properties are coming onto the market slowly, but they are. So we are seeing a rise in that at this point. The chief economist for Realtor.com, Danielle Hill, active inventory continued to grow, rising 21% above 1 year ago. In other words, we're starting to add more options, but the market needs even more before home shoppers have a selection that's roughly equivalent to the pre-pandemic housing market. Again, guys, we are still in a shortage. Supply and demand is still here. As mentioned in previous, reportings to you guys, a 6-month supply is a normal supply of inventory. We are still sitting at about two months. So we're still way below what we should be. Okay. Now, this is a really interesting slide from Realtor.com, and they've just changed their numbers. So they had a forecast, originally they forecasted of inventory was going to be still flat. Okay. 0.3 for 2022 in terms of, the amount of inventory starting to hit the market. They just changed that forecast to 15%. This was changed right around the time when the interest rates started going up. So as interest rates started going up, we are starting to see more, homes hit the market as well. And they're expecting just more of an updated inventory moving up through 2022. Again, this is all due to inflation, guys. This is just, they're trying to figure it out. Mark Fleming, chief economist from First American. We should start to see less competition, fewer bidding wars, and therefore less upward price pressure. In fact, a simple analysis shows that a 1-month increase in the month's supply results in a 3% decline in annualized house price growth. And our preliminary house price index is already showing moderation in house prices in April. Okay. So I just want to get into, I know there's all this doom and gloom. Is it going to be, housing crash and interest rates are so high? Again, we were in an anomaly in the pandemic, guys. Those interest rates were, a short period of time. That was not the normal of our industry. And here's a graph to give you kind of an idea of where normalized rates were during these different decades. So you look in the 2010s, we're in the 4s. We've already passed at that point. We're now in the low 6s in a lot of areas. So we're getting back into the 2000s. I was very used to the 8s. So when people are telling me, oh, we're at 5, we're at 6, I still tell people it's a party, because compared to the way it used to be, which was a normalized market, these are still low rates, but we've gotten spoiled. So this is, what people are getting used to. And it's not reality, guys. Reality were these numbers, back in the 90s and the 2000s, and this was more of a normalized market. Okay. Again, people are talking recession. Is a recession equal a housing crisis? No. And I can give you the data, and I'll show you to this in the last slide. It does not. Here is showing you over the last 6 recessions, only twice has the market gone down. So we've actually increased during recessions. 1980, 1981, you can see. 1991 was short, and we all know about 2008. That was, again, a kind of anomaly. That was with the banks and all the loans that were giving out. It's a different market. You still need to show proof of income now. It's still very hard to get loans. So the type of buyers that are coming in the market are solid buyers. Okay. So you see that this data right here shows even in a recession, it doesn't mean we're going to have a housing crash. So I'm just going to, this is really what I wanted to kind of share with you guys. And at this point, let me just get back to my full screen. So again, I'm Dave Markowitz, part of the Markowitz Group. I serve clients in Tennessee, where I now live, as well as California. I'm licensed in both states. If you are looking to make a move to either state, I'm here to help you. And again, data really is important to understand where the market's at. And, if you just look at the real numbers, You know, and this is where we're at, guys. This is reality. We're getting into a more normalized, healthy market. So don't panic. We're just getting to a more normalized. And until the rates start changing, we're going to see rates going up until they can get this inflation under control. But what happens, just so you guys know, is coming out of recession, they start to intend to lower rates. So, and that's to, you know, to help the market come out of that recession. So we're just getting into it. But we're starting to have a more normalized type of market. So if there's anything I can do, I'm here for you guys. You know, reach out, answer questions, whatever I can do to help. Ring the bell below down in this video, subscribe to my channel. And again, it's just data for you guys to understand. Don't be scared. Let's look at the real numbers. So, all right, Dave Markowitz here. I appreciate you guys watching, listening. Have a great rest of your day. Bye now.